Now, this could be a tricky topic and requires years of formal learning and practice. My intention here is not to teach you about technical trading, but to share with you an interesting database science that can dazzle you. You will be amazed to learn that stocks always follow a pattern. They follow a range and keep following that range until something drastically happens. Once you go through my short intro, you will get excited and maybe even decide to do your specialization in stock trading and technical analysis. Who knows? So let me first start by showing you an example. This chart is the daily price movement of HDFC Bank shares. Each red and green wick, the vertical small lines, is called a candle, and this forms the candlestick chart. This was invented by the Japanese. Now we also have pattern 2. From October 2021 to now, the range is the top blue line and the bottom line is red in color, the red line basically. This is a stock that is not going above the blue line and not falling below the orange line. The day the stock price will break the above blue line, the share price will eventually go and meet the top orange line. These are some basics to dazzle you with how patterns work in stock markets. I am told even if you follow this basic trendline pattern, you will be right at least 50 to 60% of the time until the range breaks. Once it breaks, you have to wait for a new range to form and you have to replot your new range once again. For now, I am just fascinated with the way share prices move within the range itself. This is the simplest example I have given you. Now let us look at the technical tools we can use for graphs in stock markets. I am going to share some charts on a few tools and they should be good enough for your initial understanding. The top 4 I will be discussing are as follows. Simple trend line range, simple moving average, Fibonacci retracement, RSI indicators. The simple trend line chart we already discussed in my introduction to this topic. Now we will be discussing simple moving averages. This works on a basic principle of what is the average price of a stock in the past 10, 20, 50, 100 and 200 days. I have listed only the 20-day and 200-day average to give you an idea. You will see the share price more and less from one range to another. If it falls from 20-day support in this chart, this share goes and touches the 200-day support. This is just an idea. Do not take this blindly as there are many other moving averages between like the 50-day ones or the 100-day ones and many others. But just get the gist of it and you should be fine. In this chart, however, the green line is the 20-day moving average and the blue line is the 200-day moving average. Here is a fascinating tool called Fibonacci retracement. I studied this in my art class in grade 9. It is about nature and patterns in nature to inspire art. The same logic is used in technical charts. You can read this more in detail on Google because, as I said, I don't want to confuse you or make it complicated for you to understand. The only thing we need to understand is the following. When I connect the Fibonacci chart from the confirmed top to the confirmed bottom price, the tool on its own draws a retracement level. These retracement levels are 61%, 50%, and 38% respectively. You will see from this slide, the price perfectly moves in this range. Let's look at the line drawn at 61%. This line either becomes the support level, that is, it does not allow the share price to fall lower, or it becomes the resistance level. It does not allow the share price to rise higher. The way it is used is if it breaks the support level, it means that it is going to fall further to the next support level, that is the 50% line. And similarly, if it breaks the 61% resistance, it will rise to 100% to the 100% line. Isn't this fascinating, my friends? My interest actually in stock market started once when someone explained this chart to me. It was during my summer break last year. I spent a good half day playing with this tool and charts, and it became like a toy to me. I got so fascinated with this that I started taking more interest in stock markets. Later, I will show you a live demo on how to use this tool in this graph. For now, this should be good enough to excite you, I guess. The other point I want to show you on this chart is the volume blurb at the bottom. Each line, red or blue, is the amount of shares traded, sold, and bought on that day. It shows how much interest is in that stock. Then you have the RSI indicators at the bottom of this chart. This is a separate range chart. And yes, you are right. Next is the RSI indicators. This has a simple rule and you will see it on the screen. I have blown up the bottom portion of the chart shown earlier for you to get a detailed focus and understanding. Here you will see whenever the stock reaches 70% of the RSI indicator, it is a resistance. That means it has reached its top price for now, and from here on, it will now fall to its next support level. In this chart, HDFC Bank is moving in the range of 70% and 30% of RSI band. Whenever it touches 70%, it starts falling, but whenever it touches 30%, the bottom range starts rising again and again, and it goes back to 70% level. This way, traders make big money, and this is also called buying at low and selling at high. If you understand this, you will never make the mistake of buying a stock at 70% RSI. That is a time when usually small retail investors like us buy high and sell when it has fallen closer to 30%. We do exactly the opposite of what smart investors do. So now you know the trick. I am warning you, my charts will not be perfect. It has many more detailed explanations and terms that have been dropped out to make it easy to understand for you guys. But this is an indication for you to know that this is the science of charting and technical analysis, and it has some powerful logic, and it is worth studying this in detail in the future. I am sure with this, many of you would now like to explore this science further. I am told that this science applies to all trends in everything. It applies to price of commodities, golds, bonds, cryptocurrency, and many more areas of life, even beyond the investment markets, like demand and supply and business models too. So go on, have fun, enjoy with technical analysis, keep exploring the graphs and the tools I mentioned in this video.